That is purchases of additional goods. Purchases. How much there are purchases from our transaction of trial balance?
349,000.
How 349,000? 349,000. Is there any carriage inwards? Carriage inwards?
Yes.
How much? So the debit side, how much?
10,000.
Carriage inwards. It is it? How much?
10,000.
10,000. Then we less, if there is returns out or purchases returns, we less it from the total of purchases and carriage inward. So we less returns out or purchases returns. How much? Convert it.
19,000.
20?
22,000.
Returns out in the credit side.
19,000.
19,000.
19,000.
19.
Yeah, 19.
19,000.
19,000. So when we add additional purchases with carriage inwards and less returns out, then we get the next purchases altogether. Yeah. So that next purchases, we add it to the opening stock to get goods available for sale. For sale. Goods available for sale. So this 3 for 10,000 plus 10,000 you get 5 and 50.
359,000.
9,000 minus 19.
330,000.
340.
340,000.
40,000. So when you add the what?
380.
380,000. So those are goods available for sale.
For sale.
Hiyo ndio mizigo uko nayo kwa duka au kwa biashara yako bado hujauza. We need to find out what we have sold. The cost of what we have sold will less the additional stock or what we call closing stock. It is usually given on the last day. Or otherwise, they will also give you directly the closing stock. So less closing stock. Less closing stock. How much?
80,000.
What?
80,000.
80,000. Yes. 80,000. Now, after less 80,000, now it will give us cost of what we have sold. Cost of goods sold. Cost of goods sold. Cost of goods sold. Cost of goods sold will be 300. Now, for us to get the gross profit from the trading account, we need to find the net sales, then get the difference between the net sales and the cost of goods sold. So we get sales. How much is the sales? On the credit side of the trial balance?
582,000.
582,000. 582,000. Is there any returns inward on the debit side?
Yeah.
How much?
22,000.
Less returns in 22,000. Next sales. Inakuwa ngapi?
36,000.
30. Inakuwa ngapi?
560. 560,000.
660. You less inakuwa 520.
560.
68.
60.
560,000.
560,000. Those are the net sales. The net sales. Those are the net sales. Now, we want to get the gross profit to complete our trading account. So we take 300,000
560,000.
Net sale.
Not sale.
So that we get an equal balance here.
$260,000.
560,000. Also on this side should be 5,000. And when we always balance the accounts, like we always balance it in the amount of ledger accounts, and therefore we will take the bigger amount less the smaller amount together. So we take the less amount to the amount which is having smaller, the entry which is having smaller amount. We call it cost profit.
Carried down.
So the difference between 560 and 260,000. And the side which is having more amount or bigger amount, we call it gross profit. Brought down 260,000. 260,000. Now we go. That is the trading account have prepared. We have not added there any expenses or revenues. So we call it trading account, which only gives us the gross profit. Now, we want to add the profit and loss account. That's the net loss or net profit. So we add expenses whereby the function is net profit is equals to gross profit plus total expenses minus plus total expenses are not, but this gross profit plus total revenues altogether.
Yes.
Minus total
Expenses.
So net profit or net loss is equals to gross profit plus revenues, total revenues minus total expenses. So we start by expenses. And because expenses is below the equal sign and below the equal sign of the debit entry, it's having none or it's having null altogether, and therefore we only add the expenses. We not add it to the credit because we have carried out. So expenses, then we add revenues. Add revenues. Add revenues. So we'll add the revenues and then take the revenues and add the gross profits here. So, what are the identified expenses there? Incurred by the business, we have what? Do we have them carried out?
Yes.
Carried out.
7,000.
Which textbook are you using?
Inventor.
Yes. Which edition?
Third edition.
So meaning the editions are different?
Yes.
Because here we are only having carriage inwards, which is 10,000. We don't have. On additional information?
No.
So they are having different things.
Yes.
So on my text, I don't have it. So carriage out or carriage himself. Carriage out or carriage or expenses. Any other expense? What advertising? Is it on credit or debit? Debit. So it is an expense. So we add advertisement. Advertising or advertisement in Gabi 13,000. Yes. 13,000. Any other expense? Drawings. Yes. Drawings tunatumia kwa balance sheet sawa?
Yes.
So let's go to that. So we have land and the building, not that's an asset. We bank interest on loan, but it is on the it is on the credit side. So meaning it is a revenue. Now, it is the not interest allowed. It is interest allowed. And therefore it is a revenue. So we don't under expenses. Then we have interest on loans or debit service for 8,000. So that is an expense. So interest allowed on loans is 8,000. Interest on loan. How much? You know that?
48,000.
48,000. 8,000. Deposit measure, sindio? Sindio? Discount allowed. Discount allowed 25,000. Discount allowed. 25,000. Measure. Get the totals. So revenue imekuwa na discount receipt. Ngapi? 6,000? That's 6,000? Yes. 6,000. Interest, daima loan interest. Daima loan interest ngapi? 210,000. Sio? 10,000. Then measure. Is there any other? Hakuna, sio? So it's 260 plus the total here, which is it? For 246. 246,000 plus 260 unapata ngapi? Unapata ngapi? 260 plus 246. That is cost profit plus 246 total revenue. Unapata ngapi?
506.
1,000.
So what about the total expenses? Total expenses is ngapi?
93,000.
43,000.
93.
93,000.
Yes.
So 93,000 minus 5 or 6. Net profit.
Four.
Net profit.
Four.
Down. The difference.
413.
413,000.
413,000. Then net profit. Go down. Go forward. 4, 3. Now let us extract the balance sheet.
Drawings means kuwa kwa expenses.
Drawings tunatoa kwa capital. Sawa sawa?
Yes.
Kuna statement tulikuwa tumeandika pale.
Yes.
So drawings affect what is affecting the trading and profit account. We cannot take it again to the balance sheet. Sawa sawa? What affects balance sheet we cannot take it on the trading and profit account. For example, net profit is affecting the balance sheet, only capital, and we are getting that net profit from the profit and loss account. So let us check on balance sheet. Remember balance sheet. Remember balance part of that to 1. Then capital, order of permanency, as capital, and then add net profit. Less drawings. Then have current assets. Then have long liability. And then have short-term liabilities. In case what we get here with balance, then you underscore. So you will do for me the balance sheet right together.
Yes.
Yes. Identify the assets, then and liabilities. After preparing, take the capital you have been given. For example, here the capital they have given you how much? 8. How together? 1,000. So 15,000 plus net profit, which is 413,000. How together? Plus, less now drawings out together and get the new capital. Umesikizana? Yes. So, you can call it a lesson. Have a good morning.